A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield here, comes to you live from London. It's just got a couple of minutes past midday, making it a few minutes past 1100 UTC. A big shout out to everybody that's joining the stream live today. See some familiar faces in the chats already and lots more people joining as we speak. Great to see you. Oh, how are we doing? BC, Raphael, Erica, who was in first today? I think maybe Erica with that one. Gio as well, friend Craigie boy. Not sure if the ghost is with us today. I think he's a busy boy. Choking on BC coughing. Yeah, I think I was trying to just sneak in the last guzzle of tea before going live, and yeah, did not go exactly as I planned it to. I'm not going to lie. So, how are we all doing today? Everybody good? So, obviously, we've got our alt request Wednesday. We've already got some really good suggestions. So, I'm just going to run through these very quickly. Some of them from our dear friend, the Ghost in the Machine, Mr. QBS himself. So I'd like to make a little cheeky list while we're here and take a look at which ones that we want to see. All right, so let's take a look. We're going to start here with Bitcoin today, like we normally do. We're going to just do a quick run through of that, see what our key levels are, and then aside from that, I've been requested for Ethereum, Solana, TAO and TIA. All right, so we're going to start moving through those. Very honest and honourable of you there, Erica. So big shout out to Suleiman K, our friend, who was in there early doors. Okay, SKL. And Link as well. Yeah, of course, for Bond Crypto, no problemo. Guys, girls, if you are tuning in with us today, do let us know if you've got anything else you want me to take a look at, and we can absolutely do that as well. So starting here with Bitcoin, very quickly, just going to zoom out to our weekly. What's this big green box all about? Well, it's a big weekly bullish fair value gap. So why have we been looking for a bounce here? Well, quite simply, we had this low. All right, delete that for a second. We had this low here that's within a fair value gap. All right, now always want to disclose. For me, it's always very important to give credit to those people that you learn from. Most of my education, I was very much self-taught by, was part of Michael from, which you guys were ICT's original core mentorship, which is where I learned a lot of my price action concepts, but I owe a great deal to Trader SE as well, who I've learned a lot from over the years, as well as Crypto Bird, people like Trader Day. And, you know, trading is one of those communities that you know, when you get involved in it, you meet some wonderful people and you get to learn from them over time. So I've been very blessed in that respect, which is a big reason of what I do now. So if you're a student of ICT, you'll know these as intermediate term lows. They're lows that are rebalancing a fair value gap. Now, they just make good liquidity pools. So that's the very best way to think about it, okay? So why do they make good liquidity pools? Where you have stop losses under people's lows, and the market typically moves from liquidity pool to liquidity pool. So if it's not attacking liquidity above an old high or below an old low, it's typically then looking to rebalance a gap, okay? So price kind of took out a high from over here, moved down to rebalance this gap here, and is now once again moving higher. So that's the context of why when we take a low like this, yeah, then basically what we're looking for here is some kind of reaction. Off the back of that, we then need to move down to lower time frames, which then allow us to look closer at this. So let me move this line out of the way because this has been swept now. So we're going to turn that red, and we're just going to lock this in place here. So on a daily scale, we can see that the market kind of is a little bit at odds with itself in terms of the higher time frame, because we have a bearish gap here. I've done this in red for you guys just so that it kind of signifies it. If you see my charts, then you'll typically see them in grey, whether they're bullish or bearish. But I feel like this just kind of helps people kind of visualize the bullish or bearish nature of the gaps. So within here, right, we've seen price come down. Remember what we're talking about here. Price has taken liquidity below this low, also this one. So now our expectation is that price draws up to rebalance an inefficiency in the form of this fair value gap. Excuse me. Now, we also have equal highs resting here, which was what our target was in terms of the beginning of the week that we were saying price was going to draw towards. So when we now move down onto the 4-hour, what happened? Right, so we got that. And what we're looking for here on the daily is like we got here on the 4-hour. So you see this gap here, this fair value gap here, was bearish. So we were expecting price to draw into this, reject here, and then move lower, okay? So when you close above these, violating them, then they turn into inversions. And while this one wasn't the cleanest because we did close back below it again, you can see how this area ultimately turned from resistance here into support. As it's got back above here, then quite simply we were targeting those equal highs. So now we're here and we met target literally today, okay? So price has come up, taken that out during the Asia session for us. Now we need to kind of look at this and say, okay, well, where are we going from here? And this is where I just want to zoom out again a little bit. So like we just discussed on the 4-hour, to see that bearish gap, excuse me, to see that bearish gap go from resistance to support, we needed to see a close above it, all right? So as we get that here, that's what we want to see here. If we see price today on the daily scale or tomorrow close above that here, then what we get is this becomes an inversion gap. And just think of it like this, you know, think of it in your simple kind of support resistance concepts, but not as lines. These areas are basically designed almost like a fueling station, right? So price has kind of come down here, completed its journey. It now needs to refuel to go further, okay? Now, if there's not enough fuel in here for it to complete its journey to the next point of liquidity, be that this destination or this one, it needs to search for that liquidity higher up. All right, that's just the way to think about it. While it's held within here, you know, the likelihood is that price is still going to move lower. So at the moment, that hasn't been inverted, so that is still bearish and we haven't closed above it. Should we close above it, I expect price to move towards this level here, which is 63.861. We do have this gap here as well that we would be aware of, and also a sliver in here of a balanced price range. Okay, so what's a balanced price range? It is a bullish fair value gap that's closed through with a bearish fair value gap. So this violation here leaves overlapping gaps. We take the overlap between the two of them. This area here would be seen as pretty strong resistance. Okay, so again, on an intraday basis, if we close above here, the expectation was for price to draw to here. We're then playing this level to level, right? We show strength and close above here, then, you know, in my opinion, we're pretty nailed on to head for that 63.861 level above. Okay, so that's just to give it some context. So now we move down onto the 4-hour. What does that mean for our trade setups? Well, something I really like here on the 4-hour, and let me just get rid of this very quickly and this as well, okay? Now, something I like here on the 4-hour, the reason I got rid of those is we know that there's resistance above us, right? We know there's support below, so we're kind of sandwiched between the two. There's no point just keeping clutter on your chart for the sake of it, all right? Also, for intraday traders like myself, the 4-hour will represent your high time frame, or may well represent your high time frame. So what are we looking for on here? Well, exactly the same principles, really. We've now come up and we've swept these equal highs, obviously taken out this high over here as well. So it's very natural for price to correct down lower. Now, as we can see here in the price action along here, it's all completely balanced, meaning that we don't have any fair value gaps, right? Like we did with this one, for example, when we were moving down as well. So actually on this, and you don't see it that often from me, but I'm actually going to kind of refer to the hourly chart here and say, okay, well, if we're bullish, the hourly is super, super clean. And I'm going to tell you a few things that my thoughts are on this time frame, which is there's a lot of liquidity resting below these lows. Again, for any ICT students, you will learn that as LRLR, low resistance liquidity runs, okay? Or you would have heard me talk about them for several years about liquidity clusters, or you'll hear people say like smooth highs or smooth lows. But basically think about it like a trend line, yeah? Wherever you kind of see and you can draw a trend line and say, oh, okay, then you're looking for all the untapped lows. That has not been swept, neither is that, or that. Okay, these things really can provide a big draw on liquidity. All right, so you know, for anybody wondering how that kind of works, if you just look at how price action moves, often there's a generation of liquidity. Yeah, so price moves up here, leaving all of these lows intact. Price then comes down to clear out these lows, often reacts, as we see here, this bullish fair value gap. All right, and then from here, we then look for weakness to become strength and vice versa. So what's really interesting here, though, is that as we move on to the hourly, and the 4 hour was the same, so quickly, as we see this, something really key on the 4 hour is that this also represents a market structure break. All right, so prices come up and set a higher low. This is now a higher high. So ultimately, what we're looking for here with price, is to come here to set another higher low and then progress higher towards our targets above. The issue that we have is that we don't really have any good areas to target here on 4 hour. So if we now move down onto the 1 hour, we can see we have a just perfect fair value gap here that's currently supporting price. So we just overlay exactly the same principles. I'm going to get rid of this now just to keep the chart nice and clean. The less for me that we can have on the chart. Excuse me, absolute frog in my throat today. Must be the all the shouting from the France-Spain game last night, and I'm not going to go into it, right? But what a match. Just unbelievable. Fair play to France, but unbelievable from Spain. Still such a young, incredible team like that. What an amazing match to watch. Anyway, before I digress, we've got this move here, right? So look, what do we look for? We look for the way that price moves through these highs and lows. Yeah. So if you see something like this, for example, we have this low here, which again, rebalancing a fair value gap. So it's a key low because it's an intermediate term low. Just going to draw this, right across here as well to show its significance over time. What happens when we take this low? You see how price can't close above it. It ultimately comes back down below, shows weakness. Price just isn't being accepted above that level. Price then corrects lower, all right? Ultimately finding support down at this balanced price range. No gap then. So not a balanced price range, but an inversion. So that again, so see how that was weakness here. So expecting resistance, closed above it. What happens? Moves to the next liquidity in the form of this high, and actually even higher to this one. Price then breaks down here, but again holds this level. Look at the way the wick's going to. Look at how the candles react. Yeah, so if you see candles really purging down and closing deeply into this, then you can start to say, okay, maybe this is looking weak. If it closes below it, then you know there's a high likelihood that it's searching for liquidity deeper. Now, as we kind of created this move higher, you can see we had the market structure shift here. We went from a low, set a higher high, and this set the higher low, right? Finding support in here, and price ultimately moved away. So what we want to look for here is how price kind of holds this level. Now, it's not going to do this perfectly, but let's take a look at the current displacement leg up. And we're just going to put a simple 50-50 fib on here. I'll turn this on as well so you guys can see the levels. Now, I really like this. So when we look at an expansion leg like this, often we're looking to see if there's a 50% retracement. And you're just taking it from the low to the high, right? For an example, this expansion leg higher, see how price comes down here into the lower 50% before continuation. Same thing happened with this move here, all right, so on and so forth. And this one came a little bit deeper, but just to show you how often price respects this 50%, yeah, what happens? Price comes down into the lower 50%, gives a really good risk to reward. So then, price can go up, and think about how algorithms, bots, etc. will trade these markets. So for me, it's really quite simple. On the hourly here, I'm looking at this and saying, okay, well, as long as we hold here and on the lower time frame, get a nice bullish setup. Yeah, so we want to see a low swept like this, the low that sweeps the high, and the high that sweeps the low, sorry, in this case. So we set a low, we then set a high. You're then looking for this leg, the manipulation leg, right? So you've swept. You then want to see price, I can actually draw that straight. You want to then see price close above this with a bit of momentum, and then this is the area here that you can look to be a buyer. Invalidation below there, because you know where you're wrong and you've got your upside targets to boot. Obviously, we would look for that pattern on a lower time frame. All right. Sir Devada, hello, mate. Sorry, I didn't see your comment in there. So hopefully Erica has put that across as well for link. We'll definitely crack onto that. Just want to do this kind of run through the beginning of the stream, just so people, who are maybe new to this, understand the concepts that I'm trading, which I do try and keep nice and simple. I know they don't always sound like it, but that's why I do repeat myself a lot. So while we hold this, then ultimately I'm bullish here. Now we can drop down. If I was using the 4 hour as my kind of higher time frame, then I would typically move to a 15-minute next. Now this move above here this was absolutely huge pre-London, right? Going into Asia, this absolutely ripped. We had consolidation here. Yeah, so again, good power of 3 move here. We come off a consolidation here, manipulation, and this is the expansion. So if I wanted to say to myself, maybe like the kind of cleanest way, for want of a better term, is, and look how well respected this is. This is a bearish gap at the moment, right? Look at the bodies of these candles, how they've not closed above it. Yeah, it can't just be coincidence, can it, right? So it's still repricing in here, right? And obviously on a 15-minute, lower low, lower higher. So for me to jump into some long positions or look for some long positions, I want to see a 15-minute close above here, and then on the lower time frame, then that's when I'm going to look for our. So we get a close above here, so price comes up, we get that strong close, and then on a lower time frame, right, I'm then looking for that pattern that we just discussed. Yeah, quite simply watching a low be swept, a high broke above with some impulse, and then we can look to step in as buyers here, and we have some really nice pre-made liquidity targets above. Okay, so they're the concepts. That's what we're looking for at the moment. Ultimately, you know, if price continues to show weakness here, I would kind of be leaning a little bit towards this here. So it was the hourly, wasn't it? And saying, look, if we get an hourly close below here, especially if we violate this gap here as well, then I think we're making a run on this liquidity lower down. Okay, I think this pump overnight might not be sustainable. We need to move into the New York session, ideally, which is about an hour and 13 minutes away from now for the pre-market open, and really let's see what the risk appetite is as we go. Okay, so let's take a look. Let's take a look at Link for our new friend, shall we? No problem at all, my friend. Right, USDT. What have we got? Let's have a look with our partners over at Bybit, shall we? Okay, we've got a big red blob on there from somewhere, so I imagine that we're caught in either a big daily or possibly a weekly gap here. Let's have a look. Yeah, so, okay, so exactly the same kind of principles, right? Look at what's happened. Price has come down, swept liquidity below this low. All right, now as we left as well, what else is key about that low is, they're almost perfect equal lows. But that one probably just swept that, which is why we had that big move up. But this again is residing, if we drag it back here, you can see in this fair value gap, right? Again, making it a really, really key liquidity pool. So as we look at that, we can now say to ourselves, well, price has taken key liquidity, and why do we expect a reaction? Well, quite simply, what's happened is people that were long could have been all the way over here, right? What do you get taught? Put your stop loss below the swing low, you know, aim for the heavens. And then what happens is when people get stopped out here, that immediately turns all of this into a big bunch of market sell orders. What can happen is your big accounts can then potter into here and go, I like that actually. From a risk to reward perspective, you know, there's limited downside here, but still potentially a lot of upside. So what can I do? Well, quite simply, they can fill all the orders they want here. And if they're buying with enough, you know, conviction and size, then ultimately what they're doing is they're turning all of those sell orders into buy orders, gobbling up all that liquidity and then sending the market higher. All of a sudden, they're already pretty secure here, right? You know, they're already about 3R up. So they can just secure their stops, move their loss, you know, move their stop loss up to entry. And then you're, you know, basically playing for free. That's the general kind of principle of it. The other side of it is that people that have been short from up here, right? People that have been short from up here into here. Sorry, dogs. Got a little bit of a cough. I've got a husky for anyone that doesn't know. She's coughing up some crazy old furballs at the moment. Hello, pup. Right, so people that are short from up here coming into here, there's naturally going to be a take profit level below here as well. And that's why we see these kind of reactions, okay? So anyway, just kind of getting rid of for a moment. Actually, probably got rid of a bit too much here, didn't we? So draw that back in. Price has taken external liquidity. It's now drawn up into internal liquidity in the form of this gap. Now, what's worth noting here is this gap has pretty much been fully rebalanced here by this wick. So it actually looks like it's holding some strength here. Now, we can't really be bullish on a daily scale here until we close above this, and then we are running ourselves into another gap. But to be honest, whenever you see this, I really like to see how price reacts. Yeah, so like this reaction when we came into this low, look at this beautiful pin bar candle. Yeah, long tail, short body, small nose. That would be known traditionally as a pin bar with a small nose or a short nose, or like a bullish hammer candle, right? Yes, it's a black candle, right? But look at what the body's done. The bodies tell you what price has achieved. The wicks tell you what they've tried to achieve. The wicks were the bears trying to get down to here, and the bulls said, no, thank you, push price up. Now, as we can see, doesn't always work because you had a nice candle here. But look, these candles do often lead to some kind of resurgence. Let's look here. You know, this pin bar here, all right? This pin bar here. Those driving price higher because it's showing you that price is trying to be forced lower, but it's getting bought up. It's showing absorption. So the fact that we didn't kind of sell off into this key liquidity pool, come back into this key bearish inefficiency, and then immediately look to move lower, gives me a sign that there's, you know, probably a little bit of strength in here, but daily close needed above this to invalidate this as a bearish gap and for us to look to move higher. So I'm going to actually draw down a bit deeper here and try and get some more context off of the 4 hour. So we know that we're currently daily, you know, whatever decision we make is leaning a little bit bearish on the higher time frame, right? But I mean, one thing that I will do actually, just show you on this very quickly how you can use, you know, the rules of like consequent encroachment. So if you're looking at a gap, for example, like this, then it's worth kind of, you can draw a Fibonacci with just a 1, a 0.5 and a 0 on it. Yeah, so for anyone that doesn't know, you can just do it on this, find them in there, or just write in new ones yourself and just make sure you blank all the others out. And that will just give you a perfect 50%. Now, always looking at how price reacts at this. Normally seeing closes above these, yeah, isn't often, you know, a sign of the weakness that we would want to see here to be shorting this back down. I just want to see if I can find you another good example here. So this is a really good example. So bearish gap here. All right, big bearish gap. If we take the equilibrium of the bearish gap, we can see the price didn't even get to the 50%. What happens? Continuation as price continues to drive down lower. Now, again, there's no golden rules in trading, all right? These are just little bits that we can bring in to kind of add some confluence. So while I'm looking at this over here, I'm saying like, yeah, it's not the strongest reaction at the 50% line, but it has closed above a few times. Price looks like it kind of wants to move up here, but it also looks like it's a little bit unsure. This is where we kind of look, or certainly where I look to also bring in, you know, news catalysts. And today at 3 p.m. London time, which is 2 p.m. UTC, we have the Federal Reserve Chairman Powell, Jerome Powell, who'll be taking the stand again to testify. This is basically when Congress stand him up and tear him a new one based on the decisions that they've made and how that's affecting the average people in the economy, and especially the people, you know, in their state that they're representing. And whenever there's that much conversation going on, you're going to get hawkish and dovish comments and statements that come out. A hawkish statement is one that we would consider bearish, and a dovish statement is one we would consider bullish. For example, a dovish statement would be something like, the Federal Reserve feel like we've got a really good handle on inflation at the moment, and we feel like, you know, there will be multiple rate cuts this year. If that happens, things like the NASDAQ, yeah, will just go boom. Yeah, they will just absolutely fly. People are happy to invest in risk assets. People see it as the recession period coming to an end, or certainly being toned down. And the whole concept is that people have more money readily available in their pocket to be speculative with. That's why we saw such booms during the COVID pandemic, because people weren't working, they were being paid, their cost base shrunk considerably because they weren't traveling, they weren't going out. So people started to speculate, and crypto was the really big winner for that. Now, when we're in times like we are now of recession, people don't have that necessarily, and you normally see risk assets suffer. This has been slightly different because we've seen some great progress from risk indices, you know, higher risk assets, which are like our indices like the S&P 500 and the NASDAQ. And the reason we look at those is because they're very heavily weighted with tech stocks, especially the NASDAQ. So henceforth, we can see the crossover between cryptocurrency and traditional markets. Excuse me, just take a sip of tea. Right, so anyway, back to the point here. We've got this is suppressing price as it stands, okay? And consequent encroachment isn't really telling us a lot. We're not seeing a sharp rejection. We're not really seeing ownership of this, but we have almost rebalanced this gap. I'm going to get rid of that now and move to a 4 hour and say, okay, What are we facing on the 4 hour? Again, we've had a beautiful break in structure here in the 4 hour, which is definitely bullish. Okay, so there's our market structure break. It's not a shift because it's also come from a higher low. So, for me, market structure shift, right, would be if this low was down here, it's the first time we'd kind of changed the delivery. So first time we put in a high, but where it's come off of a higher low, this is a full break. Yeah, so look, high, lower low, lower high, higher low, higher high. We're now in a bullish state of delivery. So where's my line in the sand? What do I want to see? Well, the market loves to retest these gaps, right? So this is our bullish gap. All right, for those of you that want to know, it starts around about 12.562. Now, the other thing that I like down here, I'd love this wick to be down here in the gap, but we don't quite have that. We have two really clear downside targets, all right? So if this is bullish and pricing tends to hold this kind of bullish structure that it's starting to build here, then until we break below this low, then we're pretty much in there. Yeah, we kind of have, a micro low here, but when you're looking at kind of market structure, you really want to be asking yourself, well, this isn't true. It depends how you trade. If you trade very much within microstructure as well, then you want to pay attention for this. But typically for trend, you want to be looking at what's kind of clear and obvious. And at the moment, I'd be looking at this to hold, even though it could push all the way down to here, as long as it doesn't go below this. I'd be looking for this to hold and then kind of move up. But actually, a little move down into this here before we kind of move up would be the dream scenario, or to at least sweep this low, because we're going to induce liquidity. We're going to put people on the wrong side of the market. And people so often forget this market is about maximum damage infliction. Okay. So it's, where do people think the market is going? Where can we convince people the market is going, get them to go in that direction, and then utterly reverse it? Equal highs here as well, which are a huge draw on liquidity. My ideal scenario for this is something like this, right? A sweep of this and then a move towards these equal highs. That's definitely what I'm going to be looking at here. So with that in mind, I'm going to move down onto here. Nemesis, hello, mate. And a really, really brilliant question here from Zoltan Fim. Okay, so there's definitely different ways to trade these techniques, okay? And, each to their own. Some people, as our friend Zoltan here says, are happy to leave like a limit order on a specific level and then have you risk. Other people want to, like myself, look more for confirmation, okay? So let's look at this. Hey, thanks, Nemesis. You're too kind, my friend. So let's take a look at this, shall we? Now, what Zoltan's saying here is, okay, would you just set a limit order on here? Now, if I had conviction, certainly if that's the way that I was trading, I'd be saying to myself here, look, this is like kind of a 2022 model entry technique that ICT would teach, okay? In the terms of it is a bit on a higher time frame, but what you're looking for is a market structure break or shift here with displacement. That means a big, strong move above it with high energy that leaves a gap. This is kind of, it does meet criteria. You'd normally want to see a little bit higher from here. But ultimately, what you would be then looking to do is for price to come down and rebalance this gap. So you would put your stop, you put your entry price on this gap, and then you just need a defined risk area, right? So I'd be saying, okay, a few points below this low here, because price could still wick below this, right, and recover it. So we've got our risk here. Where are we targeting? Well, we've got a clear and obvious high here. Ultimately, what I look to do is I look for targets, as high as you can. Right, not to say don't be silly with them and don't hold these things into oblivion, but then I'm saying to myself, all right, where would I mitigate risk? Well, I'm not that confident in these markets at the moment recovering because we just don't have the high time frame signals yet. So I would probably look to move my stop loss up here, maybe trim a little bit of profit. So what would that look like? Okay, nice. At 1.16, no, at 1.14R, yeah, I would then take a tiny little bit of profit off of this, enough to cover all your fees and everything that you've got to pay out for holding the leverage positions if you're trading with leverage. And then from here, I would then say, okay, well, where else? I'm looking for these clear and obvious places, anywhere that there's like relative equal highs like this. Yeah. So you got this high here, then this high here that didn't quite take it. They make great liquidity pools, or highs and lows as well, of course, if we've got them, that are within, excuse me, fair value gaps, right? So like this one, let me just zoom in. So people say, well, why don't you take this high here or this high here? It's like, well, this is the clear and obvious one, and it's within a gap. Yeah, that's come close to take it. That's come close to taking it. These make a liquidity pool, run up into that. So from here, you could then kind of, you're taking a little bit of profit here and you've moved your stop loss to entry, meaning that you've made a tiny bit of money. That's not really what you're in the market for, but you're basically mitigating risk. And then if price comes down and takes you out, bearing in mind your stop loss is here at that point, you don't lose any money, all right? Allows you to be a little bit more nimble in these kind of trading conditions, right? And then when we look at that on the other side, we're kind of going across to here and we're saying, right, okay, so if we then make that, we hold ourselves in here, we then get to here, all right, then we've booked off some money again, and then ultimately, you hold this here, price comes back down and takes you out again. Stop losses at entry, so you've mitigated your risk. Just for full disclosure, that's not how I trade, right? What I would do, and let me find you just an example of this. Actually, leave those on there. Just get rid of that. Yeah, let me find you an example in here. Okay, so let's look at this move that leads up into here. All right, so what happened? And again, I know I sound like a broken record, but hopefully over time this really helps. I'm going to do this in a style of premium discount range that ICT students would be used to. So it's a Fibonacci from the low to the high of the impulse move. Yeah, so that's the leg higher. And what's making me bullish here is we've had this move up and we violated these bearish gaps. We closed above them. So as price now corrects back down, I'm saying, okay, are we engaging with a fair value gap that is down in our green box? Yeah. So the green box is just simply a 50% range that's split. All right. So as you pull down into here, and as Zoltan says here, so what is your favorite entry method, gap or order block, or would you see clear market shift first? Well, I'll run through a couple with you. Now, the key thing here is being consistent. All right. So first of all, for me, I need to see price reacting from a bullish fair value gap. Right, so you see we have this one here, and we also have this one above it here. Neither are closed below, so until they get closed below, I'm only looking for longs in these bullish gaps. And they also both happen to be perfectly within the lower 50% of this range, right? So taking that off there, now we're going to switch our focus into here and say, okay, what would we need to see in those areas to go long? So we can see we've got a reaction in here. We also have this one above. Now, what I like doing is I love the 15-minute chart for framing, all right? So I'm always saying, okay, if price is reacting there, are we taking a low? Are we reacting from anywhere? And actually, when you look across, we've got this tiny bullish gap here, and we've also swept this low here. There's an order block here as well. All of a sudden, everything's kind of lining up. Ignore these kind of red blocks at the moment. That's Asia's range being shown for us, all right? So now I'm saying, okay, let's just pop an arrow on here. So we can be long from here. All right, we can be long from here. Once we've actually broken structure, which we do here, yeah, or you can even take it from this high. So above this line, you're then looking for longs again. All right, so let's now move down to a time frame that we can execute on. For me, would be the 5 minute. And again, what do we want to do? Well, let's look at our first arrow here. Now, these moves are always a little bit tricky, right? Because quite often you get these kind of what are known as breakaway gaps. And that's when you have these kind of bullish or bearish gaps, depends on which way you're trading, that don't get revisited. So if we're looking in here and we're saying, okay, from the ultimate swing low is down here, but we created another swing low here. So we don't quite get into the 50% here, right? So your entry would have to be taken from this gap here and would look something like this. So this gap is created. When price is displaced above it here, you would then put an order on here. Your stop loss on this one, the lowest it could go, you could be brave and put it under that order block. I would favor that one because that is bigger. And we've got a clear upside target here. We've got a 1.61 risk to reward. Yes, I would hold that for higher, but ultimately, let me just get rid of this for a moment. Ultimately, that's where I'd look to move my stop loss up. I take a little bit of profit and then you let this thing run. That way you can step away from it and just relax, okay? Good day, Peter. Good to see you, mate. Now, we have a secondary opportunity here to get involved as well, right? So, like we said, this point here. So what are we doing now? Well, we're actually still within the realms of that upper gap. Remember, these two gaps here on the 4 hour, this is just a wick, right? Price hasn't closed below. It's given us no reason to be bearish here. So we take the low up to the high here. Remember, it's that high. Lo and behold, do we have a gap in here? Let me just you know what, hang on. Let me delete these for a moment because I feel like they might be off-putting for some people. Okay, so all we've done is taken the low to the high of this move. Remember, as we did on the last one, do we have a clear and obvious gap? We do. So again, we just put our limit order on here. Stop loss below the low, or actually you can put it below the order block here, right? Because those 3 down candles are confirmed as a bullish order block. As soon as price closes above them, which it does here. So that means we don't expect price to come down below this. So therefore it gives us a tighter risk to reward. Again, we can even say here, you know, we can move our stop loss when we get to here, trim a small amount of profit and then hold for higher. Notice our price doesn't come back to trouble that area that we just discussed. So there's a couple of entry methods there. Now, the other thing that Peter was alluding to here as well is that you can use order blocks. You can also use breakers as well, right? So just seeing if we've got an example here. Yeah, so this entry here, which is beautiful. So maybe not the cleanest because we have a long consecutive batch of candles here, right? But you see, whenever you see price come and sweep, just seeing if I can find an example for you. Unfortunately, we don't have one in here. What I'll do is I'll show you a bearish example over here, right? So we'll look at the breaker block method, but actually what Peter's alluding to over here as well is that you can use order blocks, yeah? So again, see these down close candles here coming into this move. You notice how from the high to the low of those candles here, you're kind of engulfing these other candles. I'm looking at this as an area for an OB. Yeah, what you would be doing is you'd be signifying that. The reason I take those is because that's the largest collection of consecutive candles in there, right, before the move higher. So then as price moves down, you see that impulse move higher, you can put your entry on there. Stops below the order block, and ultimately then you're targeting higher up, all right? But let's not forget, while all of that looks well and good, it's the 4-hour chart that's given us all of that context, yeah? It's the 4-hour chart that's told us, well, hang on, you know, we're in a bullish state of delivery here, so where are we looking for? Now, while that is well and good, yeah, and let's just clear these away. Now, while all that is well and good, what we want to say is, okay, well, what are we looking for now on here, yeah? So if we go back to our 15-minute again, I'm saying to myself, well, I want to see a liquidity sweeper. I want to see people caught on the wrong side of the market. So we know we've got Asia's low down here. Ideal scenario, we take out Asia's low, yeah, recover that, then we get like our pattern where we get a sweep of the low, price recovers and moves higher. That's kind of our dream scenario, right? Because we know how much liquidity is resting below this. Also, you know, there's also a chance we don't come down that low. Now, if we don't come down that low, we still need to be engaging from somewhere. So there's a low here. And there's a low here. So now, if these liquidity pools are good enough, so let's mark out the high. Remember, as we were just talking about, yeah, in terms of our method, what do we look for? Right, we are looking for a low to be created. That's these lows here. Price to move up a little bit. That's this move higher. Price to sweep one of those lows here, which is what we're looking to happen. Then we want to see the high that sweeps the low, which is this high. Right, so the sweep of that is what we're looking for from here. Yeah, then we're looking for strong expansion above this high, which is represented by this. And then we can look to enter on here. So if we saw something like this, boom, boom, that's where we take our entry and we look to trade that higher, all right? Craigie boy, oh, no worries, mate. I hope you have a fantastic week of work, my friend. We'll catch you around soon. Thank you, as always. Okay, so just looking at that from an entry perspective, like obviously you do that on 15-minute. You can also drop it down on, say, 5-minute as well. Got a very, very similar situation here on the 5-minute, except we've already taken a low here on the 5. Yeah, and we've taken another local low here. So if we were looking on this time frame, the other little bit of confluence we've got here is we have this very skinny bearish gap. So should price, you know, sweep out that low here, this is the manipulation leg lower, yeah? We would then want to see this move up for price to crack this high here, and then any move down to here, this is where you would be a buyer and price then can move higher up, all right? Just be careful of your risk allocation because obviously you've got a low move here. But if price comes up and closes above this, setting the order block, then you can put your stop loss below the order block candle there as well. Okie doke. So, Peter, my friend, how are we doing? Are we really out of the woods here, or is it just slow down until, say, after the walking goes Biden loses the US election? Yeah, I think, you know what, I'm still relatively positive. So, I'm not often come under a lot of flack. I was bearish, a fair while ago based on the price action, which, doesn't always work out. In this case, it happened to be pretty right. But now I'm starting to really get bullish again because certain assets are showing a bit of strength. We've got some good kind of catalysts in terms of, you look at the election run-in, they are really, really typically, prosperous times if you look historically. And, historically as well, it's not a very good time of year. There's a saying in crypto, isn't there? Sell in May and go away. And then people typically come back after the summer. So, July moving into August can be pretty turbulent times, right? And then you typically see that uptick, towards the latter quarters in there as well. Venus XVS, we can absolutely. I'm going to start ripping through these in a second, guys. All right, Venus XVS. And you know what? Yeah, investor magnet. We can absolutely do that. Doge. I think we'll probably have to put a pin in it there because I really need to up my game in the next 20 minutes. All right. So this is where I am on Link. All right, guys. So if anybody's interested in Link, I hope that is helpful. Now, what we're going to do is I'm just going to fire through these. No more kind of in terms of hopefully that is interesting. And Zoltan, yeah, please do let me know you test it. Come and drop me a message. Come and grab yourself a free membership over at the Bird Nest where we trade, and come and engage with the trading team over there. Ask as many questions as you want, but please do come back. They're really interested to see your results. And if it's something that you need help with, please do let us know. So that's where we are on Link. Now we're going to just do an absolute quick fire round, and we're going to go through Solana, TAO, TIA, SKL, Venus XVS, and Doge. All right. So let's absolutely get on one. Big gulp of tea, and then I'm with you. All right. Right, here we go. So first up, Solana. And you know what? I'm going to do these ones on Binance today because I've got huge respect for our partners over at Binance. We've been with them for a long time, and you know what? Unfortunately, I can't trade with them here in London anymore. I'm very, very lucky to be with Femex now, who are just awesome. And I always use the Femex charts because they're the charts that I trade, right? But I know a lot of our fam trade with Binance, and the reason I'd like to do this little homage to those guys is just because they really genuinely are always doing amazing things for the space. If you look recently at some of their posts, their achievements, what they've done, huge things for cryptocurrency. So let's take a look at the Binance charts. Plus, they're pretty sick charts, and they always have really good liquidity. Now, we're going to focus on our high time frames, right? So we are going to go for this. There's a great buy-sell pivot here, by the way. I certainly wish that I'd held more Solana from down there. Excuse me, real kind of croaky today. So, weekly scale, where are we? What have we done? Where are we going? So, it's a pretty ugly chart actually on the weekly because we kind of not really respected this fair value gap here. We then inverted this one here. So this was the key catalyst for why price started to move lower. We would have looked for that to offer support. We ultimately inverted it, closed below it. The expectation is that price is then looking for liquidity lower, which it found, right? Remember our rules. We're talking about the idea that price is either seeking liquidity above a high, below an old low, or to rebalance the gap. If the gap doesn't work and hold and it violates, we then look for the next liquidity lower, which was this. Actually, really interestingly here, we've got another slither of a gap here, but a bearish gap. So for any doubters amongst you, what happened? Price took external liquidity in this low. It's now come up, rebalanced this gap here, which is still bearish, and price is now moving lower. Technically, on a weekly scale, our downside target would be resting here, which isn't, well, no, it's not a confirmed swing low until next week. So actually, it would be here on 118.47. Now, on a daily scale, what's giving me conviction here? Well, actually, again, it's a little bit of a mixed bag here, all right? So we've got this sweep here, which is bullish. Price then made its way up to this fair value gap, right? Now, we did invert this fair value gap, but again, like we saw on Bitcoin, it really wasn't well respected. Now, that can be the problem sometimes when you have adjoined fair value gaps like this, because this is the one that's definitely suppressing price at the moment, okay? So this bearish one here, while we remain below that, aligned with our weekly bias as well, it looks like price is going to make a move lower here, okay? So close above this on the daily scale, and I think we make a move up towards this high. So We're going to label that high in there as well. And we're going to say, okay, what have we now got on a 4 hour? Well, on a 4 hour, we've got a little bit similar to BTC here, except one thing I would say here on Solana is that we haven't managed to displace above these equal highs. Notice how they're perfectly equal, these two, right? So price has swept this now, meaning that actually aligned with all of this and the fact that we've got all of this kind of trend line liquidity down here, liquidity cluster, or, you know, LRLR, however you look at it, untapped lows drawing price down, I'd actually be favoring some shorts here. Now, even if it's just to kind of clear out some liquidity here, because again, look, if we expect a 50% retracement here, then maybe we're going to come down. And what liquidity have we got resting there? Well, we have this low. All right. So I think that's a really, really good low there to say to ourselves, okay, if price does reject here, let's target that on the lower time frames. Reassess when we get to here. Any more weakness, I think we move lower. However, obviously on a daily scale, we're looking for a close above this fair value gap. The top of that is 146.14. Okay, so back to the weekly, and now we're going to move on to cross through that TAO. Let's have a look here. Okay, on the spot chart. Okay, wow. That is, it's had a bit of a pummeling, hasn't it? We don't really have much data on that one. What did we have here? Okay, so we got some nice buys on this a little while ago, actually. I remember this. Again, simple principles, right? We said, look, if we come down this low, then you're almost certainly going to see a reaction. But what do we get? We got an impulse move higher. You know, I know I said I wouldn't go into education too much, but you know what I'm like. We got this here, reaction at a bullish gap, boom. Then what do we do? Next resting liquidity was up here, right? Look how we carved through those fair value gaps, tagged into this, and then ultimately started to break down. No problem. So what do we want to see now? Well, on a daily scale, this is really, really simple for me. This is probably the best looking chart in terms of clarity. Bearish gap off the back of us taking a low here. So what have we done? We've taken external liquidity in the form of this low. Yeah. Reaction. We now expect price to draw to this gap. And this is now our kind of proving ground. If price stays within this gap, but overnight holds this, then we will confirm a bullish FVG below it. Excuse me. So if that does happen, then we would look for this to hold and price to push up. Close below this, we go for these, target these lows. However, that's not confirmed yet and won't be until tomorrow. So for now, again, while we're within here, this is still a bearish gap. So we really need to be careful. Close above this and we start targeting these highs. Now, once again, you can see all of these, it's a little bit steep, right? But you can see all of these beautiful untapped highs here. 1, 2, 3, 4, 5 sets of them as we go along. So price, if it gets into these, can often really shoot through these areas quite quickly. In a few years, we'll look back at so and say, I should have got more when it gets over $2,000. Yeah, absolutely, mate. I mean, Jesus, some of the coins I look at now, and someone that's not, I'm not a particularly good investor, actually. You know, in terms of buying and hodling, I've always made my, I've made my kind of career out of intraday trading. Yeah, so just sniping little bits and pieces of the market where you can. But thankfully, my team over at the Nest are absolutely exceptional at it, and I've listened to them a lot more over the last few years. So I've managed to get some decent investments in. But God, yeah, I mean, I wish I'd been holding Sol down when it was in the 10, 20, $30 region. So that's really clear for me. So now moving on to the 4 hour. Yeah, we want to look at what price is doing. At the moment, we don't really want to let this put us off. If you really need that high time frame context to say, okay, be careful here because we are within a bearish array, then please do keep it on there. But for me, I like to just take that on board and then step away from it and look at a nice chart. So a couple of interesting things on here, right? So this one is a big bullish gap here. If we reject from up here, and there's a couple of areas I think we could look to reject from. One is this high. And the next thing here that we would want to hold is if price does close up there, then I'm interested in this holding as well, because this would then become a bullish order block. If price retested this, you'd expect the buyers to step in and for us to move higher, targeting this high first of all. All right, but for me, it's all about how price reacts at this high here, because if price can close above this, showing displacement, then I think we can look to move a little bit higher. And we would also confirm this skinny gap here that is within an order block. So this area should hold. Fail to close above that, I think we probably move a little bit lower. There's a swing low there. And then I think we move down towards this gap here that starts at around about 2247.7. All right, so that's where we are on TAO. So TIA. Let's have a look on the weekly. Well, it turns out the green arrow was optimistic, but the red one was probably spot on. These will be what are known as trend verts, which is something that you use when you kind of get to these key pivot points in the market when we're expecting a reversal. They're no indicator based, just purely done on TA concepts. So what's price doing here? Well, actually, we do have a very skinny weekly gap here, right? Very, very skinny, fair enough, but it's doing its job at the moment. It's rejecting price. Price has kind of swept out below this low and is currently kind of reacting at this again. Loves the skinny gaps on the weekly here, but this skinny bullish gap. This is a nice reaction. I like this. Look at the way the body's held this and price starts to move up. So now that's our biggest challenge here on the weekly. On a weekly scale, if we close above this, then I am targeting 11.960 on the weekly scale. Now, on a daily scale, we can see, okay, nice. Now, this is the difference between a market structure break and a market structure shift. This is a market structure shift. Okay, it's not a break because for it to be a break, it would need to be coming off of a higher low. So look, lower low, lower high, lower low, higher high. It's the initial indication that price could be looking to move structure. So what I fancy here is while we've kind of taken out this high, and it's not just a market structure shift as well, it's also an intermediate term high. Remember the concept I taught you that was learned by me anyway from ICT in terms of, you know, highs or lows that are within fair value gaps being good liquidity pools. So quite natural that we could expect a correction lower if we apply our rule of 50% here. Lo and behold, we can see this nice gap, do that perfectly actually. This nice bullish gap here is set within the lower 50%. All right, so where the green overlays the green, that's where we want to be looking for buys. If we close below this, then we're likely targeting this low followed by this low here. How does that play in on the 4 hour? Well, quite simply, this is an interesting one, right? Because we've got the close coming up here in 7 minutes. Now, this at the moment is still holding a bullish gap because look at the way the body closed on there. However, it has been completely rebalanced. What I'd be looking for if we close below this, this would become an inversion gap, and I would have even more conviction that we're heading lower. Yeah. Again, we've got this untested order block down here. We've got these gaps here that are unfilled as well. So, like we said, if price is looking and gravitating towards this here, we could look to take some intraday shorts down to here and then look to reassess here. If we get that pattern again, then, you know, on the lower time frame in here, and we get that kind of long setup, then I'd actually absolutely be happy to take that in there. But if we violate that gap in 7 minutes and close below, then I do think that we're making a move a little bit lower. The next one is SKL. Okay, nice. So this, I mean, if this is going to have a bullish reaction anywhere, in my opinion, it's going to be here. So we've swept an intermediate term low here, right? So just to show kind of visually what that is, here's the bullish fair value gap that we're holding. That's the low that sits within it. We now expect some kind of bullish reaction. Also, we've taken external liquidity here, right? So remember, once we've taken external liquidity, we look for internal liquidity, which is in the form of this gap. So at the moment, I'm feeling like we bounce here and we make a move towards this gap. Remember, this is on a weekly scale, guys. So, you know, it all needs context. We don't just blindly long here and just say, oh, we're going to this red box because the weekly says so. We're just using that to refine where we believe the draw on liquidity to be. Now, what we need to remember here on the daily is that this is still very bearish because we're delivering from this bearish gap. If we bring in our rules of consequent encroachment again, we can also see here, price is really struggling, like once, twice, now 3 times trying to get above this 50%. Actually looks a little bit weak here compared to some of the others that we've been looking at. So we're going to leave that there. There's not really much else to say on there, all right, just showing you that that did indeed sweep that low. Right, so actually now I really want to move on to the 4 hour and say, okay, from here, probably favouring a move to the downside at the moment. I have to say it, right, look, not a lot of conviction in these moves higher. You're not kind of seeing that like we saw in some of the others, that big pop, leaving a nice big bullish gap for us to target to go long. Here, this is telling me that actually this looks like it's much more generating liquidity down here. Yeah, untap low, untap low, untap low, untap low, that price can purge into before it makes its ultimate decision. And again, when we look back on that, we can see that price has kind of really struggled with this 50% on the daily, which gives us that first indication that there can be some weakness. So this one of all the ones we've looked at so far is probably the least clear and obvious, but again, we trade what we see on the charts. For me, I'm favouring a bit of downside here, plus we have taken out this high recently as well. So a corrective move lower would not surprise me. I'd just be targeting these lows down here. We've got one here at 0.04126 and a little immediate swing low down here as well. Again, I would want to, on the lower time frame, see that nice sweep of a low and a big bullish resurgence before considering long setups. So what was the we asked for Venus, wouldn't we, from our friend? Let's have a look. Where was it? Venus XVS, wasn't it, by Peter? There we go. Venus XVS. Here we go. I think we had a look at this the other day, didn't we, Peter? I think that's it. So, okay. So as we were discussing previously with this, we can see here we had this order block. Now, like we do when we get a fair value gap, we're now looking to see what price it is. The way that we close below this here, our expectation was the price was going to move to the next point of liquidity lower down, which actually was in the form of this low. And it did actually leave that low marginally intact, right? You see how it didn't quite close below. We then came in back below, and now again, a big move of displacement lower. We're now reacting over here at this order block. Now, really on this one, on a weekly scale, doesn't give us tons and tons, right? You know, this was a lot clearer, for example, when we were looking to short this before, we created this big bearish gap. What did we say? If we tap into this gap, we sell it lower to the next liquidity, which was here. We then came back up to take liquidity above this high. That's a high within a fair value gap. Remember, good liquidity pool. Ultimately, then we were targeting these lows. So it must have been a while ago we were on this one, because that's all obviously played out now. So let's move to the daily. And what we want to see is a really nice inversion down here. Oh, this looks like it's just holding it at the moment, or maybe marginally kind of close above it. This isn't really the kind of displacement I want to see, but it's still holding, right? And one thing that I do like about this, get rid of that actually. Right, one thing, actually hide it. Again, I always like keeping the old annotations and stuff on the chart, just putting them into groups. You can always look back and learn from it in the future. So again, look, big bearish gap. We can see the absorption from the bulls down here in the nice long downside wick. Price has recovered, blitzed and closed above this. So actually here, this becomes our next target, all right? So on Venus here, we are looking at 6.336, right? That's the current upside target. And I like that. We do have this swing high here as well, which happens to be exactly the same level, 6.049, as our high time frame swing low over here, right? Again, look, when you zoom in on lower time frames, look at how significant these can be. Support, support, support. Small deviation, price can't hold above, closes below again, sells off, comes in, touches it again, sells off again. But in doing so, it has set a low, a higher high, and now a higher low, certainly on a macro or micro scale. So we have got bullish momentum here, and we're looking for this level to currently hold. So now as we drop down onto the 4 hour, we're just looking for supporting theory for that. And the kind of most obvious thing I would say that we have here is looking at, well, a couple of things. I like this swing high here, right? Because this is the swing high that led to the structure break, yeah? Because we've come a higher, higher low, now a higher high. These areas can be really good support resistance flips, because look, with rejection, strong close above, we now want this area to hold. Now, in fact, in 26 seconds, so hopefully it shouldn't let us down here, we're going to have a very, very good ally in this bullish gap, all right? So 17 seconds, we'll wait for this to close out. So quite simply, as long as this bullish gap holds and this SR level holds, then for me, this is low time frame longs tracing this higher, okay? So while we do that, we've got that has swept that higher marginally. So actually our next upside target is what we said before on the high time frame, 6.336, and also this local high here, which is a 6.228. So I think we just set, wait for the new candle to begin. It looks like it's actually just frozen there for a second, but it shouldn't have done. We should get a new candle print any moment. But semantics, not sure why that hasn't printed yet, but basically we will get that here, and then we will be looking for that one to hold this area, and then when we do, push up to our initial target up here, close below this, and we start coming down for these lows underneath. And then we're going to close up on Doge today, guys. So let's have a look at good old Doge. And there's the start of the new candle, obviously, just as we flip screens, right? So look, on here now, to show you what we're thinking of, that's currently holding this level, all right? So on here, quite simply, what do I want to see? Well, actually, I think we've just had the sweep of the low, so I think we've had the inducement, or actually equal lows here. Oh, that's lovely. Definitely not equal highs, though. Equal lows. Now, we'd love to see this swept, maybe this low as well. And then what do we look for? Well, quite simply, this is the high then that sweeps the low. So as long as we get a sweep here, price moves down here, sweeps that low, closes above here, we can look to take long positions aligned with our bias, trading this one higher, all right? Now, remember, 4 hour zoom out, if we close below this, yeah, if this area fails to hold and we close below this in the next 4 hour candle or the one after that, then we would look to trade this lower, okay? So, back to Doge. Again, it keeps purging deeper and deeper. Time did freeze there for a moment, didn't it? I think maybe some repositioning from the big boys they didn't want us to know about. Look at that perfect rebalance of this gap. Literally to the point, to the cent, right? That's been rebalanced now. Also, again, looking at consequent encroachment, we can see the price has really kind of headed quite deep into this already at the 50%. So once we close below that, you know, that's normally a sign of weakness. However, this has now been rebalanced, but it hasn't been violated, meaning it hasn't been inverted. We need to close below this to then come down for this really good looking liquidity cluster set below here on the lower time frames as well. This will be a really big run of liquidity. But as long as we hold this, we've taken a low, we're looking for price to move higher. So we say, okay, on a weekly scale, where's the likely target? If we're looking for price to move now towards a fair value gap, it's this bearish gap here. So that bearish gap there starts at about 0.12880. That would be the target for a weekly scale, looking for price to draw towards that. Now then, what would we want to do with conviction? We can see again, we've got kind of multiple adjoined fair value gaps, which isn't ideal. But look, on a daily scale, guys, we're still kind of within this, yeah? So on a daily scale, you'd want to see price close above this, and then, good, that is incredibly attractive. Triple equal highs, often just really beautiful engineered liquidity here, right? And then I think we've got, it doesn't quite get into the fair value gap there actually, but there's that high above it there, almost making it a quadruple. That's a really nice area for price to attack, okay? So in two minds here, because I like the draw to the upside. I like it a lot because these smooth highs and that are often attacked, same as smooth lows. But while we're in this bearish gap here, we have to be favoring trades to the downside. So once again, we're going to revert to our lower time frame, and we're going to say to ourselves, okay, well, let's put a set of rules in then, shall we? What would we need to see? Well, currently price is kind of a little bit uncertain, right? High, lower high, higher low, lower high again. And now it's kind of, you know, for want of a better term, kind of flailing around here a little bit. We have a very skinny 4 hour bullish gap here. So I would say, while we hold above this, we've got this kind of semi-abnormal wick high above here. And we've also set this one above it here. So intraday, I think I would say to myself, right, well, as long as we hold this, price looks like, judging by this candle here and the displacement left, that we've swept some lows and price now maybe wants to move up. So I would favor that. I think I would probably also kind of look to the lower time frames here for a bit more context. And we can see here on the hourly that this actually looks quite a lot nicer for the bulls here because we're holding this bigger bullish gap here. So let's get to this one for a moment. Be aware of that, by the way, on the 4 hour. Don't just delete them. You know, I'm deleting it just to make the charts clearer, but I'd certainly have a keen eye on that. So look, you know, you've broken structure, you've taken out all this liquidity. This is where you'd be looking to go long, all right? Now, obviously, we're not within one of our trading sessions here. If you don't apply to those kind of kill zone sessions, then this is where you look for. But as long as we hold this here, I think we can move higher, closing below it, I think, and we could start to make a move down to attack the liquidity down there. And again, we can see what we would have done here. We got our sweep down here. Remember, really key that we see that inducement. We're just after London session, which would have kept me out, but doesn't mean that it has to do so for you. And what do we say? You know, in terms of that theory, you'd be looking for price to close above here. You take your entry on there, stops below the order block, and then you would ultimately target this higher. But what you'd also look to do here is find, like I said, are there equal highs and equal lows? There are here. Gives you a brilliant place to just say, okay, I'll mitigate my risk here. What are we here? Maybe a bit low, about 0.84, but you've got good percentages. So for an intraday trade, you know, you could get away with securing your stops there. You'd probably have to close maybe 15, 20% of your position in order to cover your fees. Because remember, just because you move your stop loss to entry doesn't mean that you're not going to get charged fees on the position if you do get stopped out. But that would be kind of like, you know, a little bit of a look at what we'd be looking for here, with key draw being the upside here, and obviously those equal highs there. All right, guys, look, I'm going to have to shoot slightly longer session today, but we did cover a lot of assets. Hopefully it has been useful for you guys. Going to jump across with members of the family now over at the Bird Nest, and we're going to jump onto our live trading session. We managed to skim a cheeky 2 hour out of the market yesterday on the NASDAQ. So you're going to ask everybody that's coming over to there with us shortly to make sure you get into the Trade Club channel at the Bird Nest. Let us know if you've got any crypto charts you're looking at, if there's anything that's going to make us, you know, compel us to trade these instead of the NASDAQ today. Please do be aware Chairman Powell is taking the stage, or, well, he's getting grilled, shall we say, at 3 p.m. my time. That's 2 hours from now, or at 2 p.m. On UTC. All right, guys, you're very welcome, Peter, and everybody else that joined us today. We had 2,500 people on this show today, which was absolutely magnificent. I hope you will find it. If you do enjoy the show, please do hit the like button for us. It really does help, and also helps the algorithm mean that other people can find this content too. If you want to come and trade with us, me and my wonderful team over at the Bird Nest, and Bird's wonderful team, really, I just have the honor of being head of the analyst team over there. And whether it's fundamental analysts, whether it's algorithmic trading, whether it's swing trading, position trading, you know, day trading with myself, you know, we've got a professional team of traders who do nothing but trade over there, who are happy to teach and help you. And like I say, memberships start from free. You can also find all of this content for free on our YouTube channel under the live tab if you want to watch mine. And you can follow me on Twitter as well at BC_Richfield. All right, guys. And if you're interested in any exchanges, I know at the moment with Mika licensing coming in, the mess that the UK is in, it means that we have to be a little bit more nimble with our exchange decisions. Then, you know, we're partnered with the very best of them. So you can find deals and bits and pieces in the links down there. All right, Raphael, my man. Yeah, we'll see you over the live trading session, as well as you, Erica, Geo as well, and some others. So I look forward to seeing you over at the Nest. Wish you all a fantastic week ahead. Please do trade safe. Good luck to England tonight, and also good luck to our European family in the Netherlands. Let's hope for a great game, and the very best of luck